Today's financial advice is sponsored by Endeavor Private Wealth. Well, Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our latest segment on investing. Chris, good morning.
Good morning.
Okay, Chris, so the stock market rallied strongly towards the end of last year, and the S&P 500 stock index recently crossed, 5,000, and it's registered 11 new all-time highs, even with a slight pulling back after last week's higher than expected inflation report. So people seem to have a propensity to want to buy stocks when they're on a hot streak and do the opposite when they're not. You know the expression, the trend is your friend. So what are your thoughts on the merits of investing in the trend?
Dane, what you're describing can be the result of momentum investing or a behavioral anomaly known as herd mentality. Let's consider momentum investing first. It's a strategy that tries to tie capitalizing on the existing market trend. Momentum investors look to a variety of technical indicators derived by analyzing historical price, volume, and other data in search of trading signals that may identify a trend's either beginning or end.
Okay, that sounds pretty complex, perhaps a little too complex for the average investor to implement.
Well, it certainly can be, as the strategy relies heavily on technical analysis and the use of derivative securities in the futures market. Not only may the approach be beyond the purview of the average investor, but most professional investment managers employ fundamental investment principles such as discounted cash flow rather than the technical trend-based principles of momentum investing.
So where does the herd mentality come in now?
Well, people find it easier to follow what others are doing because they may lack the time, the knowledge, the resources to make investment decisions on their own. As positive news spreads about a possible investment trend, the fear of missing out may cause them to invest in the trend based on a little more than just what other people are doing. That can actually help momentum investors then when the trend is upward, as the herd investors extend the bull market. However, in a bear market, the fear of losses and panic could lead to more severe selling, driving downward trends even lower. Being part of the herd is exciting while the market is moving in the herd's favor, but like in the movies, the herd can seem to turn on a dime and herd investors can lose lots of times.
Okay, Chris, any final thoughts on this subject now?
So I believe in long-term investing performance and the resilience of our economy and investment markets. I also believe that every investor's situation is unique. We all have different time horizons and the ability to tolerate investment risk. And that is why I believe investors will be better served by working with a trusted financial professional who can guide and counsel them in choosing investment strategies that best fit their needs and objectives.
Wonderful. Chris, as always, thank you for your time. We always appreciate it. Of course, everybody, to learn more about Endeavor Private Wealth, visit endeavorpw.com.